Hello, I'm John Crowther. Welcome to This Week in the Markets. This week, the news centered around China. Earlier in the week, its central bank, the People's Bank of China, the PBOC, announced measures to stimulate bank lending to businesses. It was also talked about residential mortgages, lowering the down payment necessary to buy a home. The idea was to try and lift up both the residential and commercial real estate market, as well as small and medium-sized business lending. A few hours ago, the fiscal side, in terms of stimulus, was announced. President Xi talked about the government doing whatever it took to take the economic moribund activity to a higher level over the last couple of months of this year, as well as 2025. This has the Chinese stock market, as well as other emerging markets, rallying this week. It also has the S&P 500, NASDAQ, and Dow Jones industrial average close to all-time highs. One thing I'm looking at right now is the 10-year bond. The 10-year bond has actually risen since last week when the Federal Reserve announced its rate-cutting cycle. It went from 3.5% to 3.75%. The yield curve, which was inverted for oh so long, is now uninverted, with the 2-year at 3.5% and the 10-year at 3.75%. Very narrow spread, but still it is uninverted. The 10-year might be signaling growth ahead, a soft landing by the Federal Reserve for the U.S. economy. Also might be looking at sticky inflation going into 2025 and 2026, and therefore has risen. It's hard to say, and it all will be data dependent, but it's one thing I'm looking at. I'm John Crowther. This was This Week in the Markets. Have a great week.